Monday, October 1st, 2018, Maneco 64, home of alternative economics and contrarian views. This morning, I'd like to talk about the extreme levels at which the Dow, or the stock market, and bullion, the price of gold, are at. And I'm going to look at the DowGold ratio and show you how it's acted throughout probably the last 100 years. Before I go further, I'd like to say that I've set up a promo code with goldinvestments.co.uk. Promo code is Maneco64. You can get 0.5% discount from any bullion purchases at goldinvestments.co.uk. Many of you ask me, where should I buy gold and silver? And Gold Investments is one of my top choices, and they've provided a promo code, and we will both, both benefit from it. You get a cheaper price, and I'll benefit from it as well. Does that mean that I'm shilling gold? No, I'm just giving people their, my opinion on what gold is and how it can protect you. If you want to buy gold or invest in gold, it's up to you. That's the way I've always done it, not only with my viewers, but with friends and family when I talk to them. And yeah, so before I go into the Dow-Gold ratio, I'll look at what the markets are doing this morning. It's 8:12 London time, 8:12 a.m. of course. Spot gold and silver have not continued their strength from Friday. It could be just a little correction. It could be that it was a false move. I personally just think it's a small correction. We're going to keep going higher. Spot gold, though, is down almost $6 now, 1186.25. We got to 1180 on Friday, the low. So down about 0.5%. Silver 14.55, down about 9 cents, or 0.2%. So that's the precious metals this morning, and that's the spot price. The Dow futures up 165 points, or 0.2%. Not too sure why we're up that much. Maybe fund managers looking to buy at the beginning of the quarter, beginning of the month, but very. I saw late last night already when we opened, we were up 170 or so. So it's at 26,625. So just below the all-time high, I would say, from January. Of course, the recent all-time high is higher. S&P up 0.5%, or just under 15 points, 29.28. The NASDAQ 100 is up 0.2%, or up 50 points. So there you go. Stock market continuing higher. Currencies fairly quiet. We've got the pound unchanged at 130.31. Euro is down 22 pips at 115.81. And the dollar is up quite strongly against the yen again. It's at 114, up 0.25%. The dollar yuan, dollar's up 0.1% at 688.60. Crude oil remains very firm. We got WTI at 73.26, up 0.2%. Brent is 82.85, up 1/3%. What about the bond markets? Well, they continue to be quite interesting. This morning, the Italian 10-year yield is higher. It's up 9 basis points. We're at 324. We are at key technical closing levels, 324. So Italy not out of the woods. U.S. 10-year yield 307, up 1 basis point this morning. And there's also some very interesting articles and headlines on Zero Hedge, which makes you wonder about the stock market. For example, Chinese manufacturing growth grinds to a halt. as exports tumble. B of A's best leading indicator goes for global indicator for global EPS or earnings per share just crashed. Druckenmiller, we're at the point in the rate hike cycle when bombs are going off, and I quote him. So all these warnings from very reputable hedge fund managers, all these indicators from Bank of America, from China, pointing to a slowdown or danger for the economy and the markets. And in spite of that, people are very complacent. So the Dow-Gold ratio, why is that ratio important? Well, basically the Dow is the benchmark for financial or paper assets, and gold is the benchmark for real assets, for tangible, assets or commodities, or even for monetary health of the system. And I've got a chart here going back to 1910, and you can see in 1929, just before the stock market crash, that ratio was 18.4. So you needed 18.4 ounces of gold to buy one Dow. We had the 1929 early 1930s stock market crash, and that ratio got down to 2. The Dow was probably around 40, 45, and if I'm not mistaken, that was the low. And gold was, of course, $20.67 an ounce. That's when gold was money. And then that was the bottom. And then from early 30s to the mid 60s, that ratio went up. Not in a straight line, but again, we had another credit boom from the 1930s to the mid 60s, and we got up to 28, so a bit higher than 18, 27.9 to be exact. And then we had from then on that credit cycle or credit boom unwound and went all the way to 1 in 1980. So what this means is financial assets got overvalued in 1966, in 1929, and the way things rebalance is that the stock market corrects and the price of gold goes up, and you get how can I say, a reset, so to speak. So in 1980, gold was 880, 750, around there. The Dow bottomed around 800, so the ratio got down to 1. And since 1980 from 1980 to 1999, 2000, another credit boom. And we got up even higher, almost 44, 43.7. You notice that in this era of fiat money, these and central banking, these booms get bigger and bigger. Why? Well, because it's easier for the bankers, the governments, central bankers to issue a lot of the paper assets because there's no anchor, no gold anchor. Notice that we did not see these big moves in this ratio before that. There were ups and downs, fluctuations, but nothing as huge as this. So what's happened since 2000? Well, that ratio dropped, I think it was to around 6, if I'm not mistaken, in 2011, 12, maybe a little higher, around 7. And then the central banks threw everything at it. Well, they started throwing everything at it a little earlier, just after the '08 crisis, '09, '10. And they're still throwing everything at it. Some people argue that the U.S. Treasury is using the missing 21 trillion to keep the asset bubble higher, the stock market and the bond prices higher. It was Rob Kirby in an interview with the X22 report. He could be right. We don't know how much money the Exchange Stabilization Fund has. And that fund, believe it or not, was created right when the Dow-Gold ratio bottomed, pretty much around the time it bottomed at 2 in the early 30s. by one of the worst presidents, in my opinion, ever, FDR, who took the American people's money. He confiscated, basically stole it, and used World War I laws or executive orders as an excuse. The U.S. wasn't at war. And right now, we are around 22-40 in that ratio. But one thing from the correction or from the move of that ratio until 2012 is that it was not allowed to go to where it's supposed to be, to go to rebalance. And that, in my opinion, is to at least 1. We might even go below 1 this time, because we've had such a huge infusion of debt and, how can I say, credit. But even if you look at how much all the central banks of the world have thrown into the system, that ratio actually hasn't done that well at all. Even for the fact that the Dow is making all-time highs, and it's above the 2000 levels, 2001 levels. That ratio hasn't even managed to get back up to 40. So that's actually a non-confirmation, in my opinion. And when that ratio is going to turn around, I don't know. But you can bet that right now, financial assets are still way overvalued in relation to hard assets, and especially physical gold. And that ratio will turn around. This is just like a correction in a downward trend of that ratio, much like we had in the 1970s. You see the ratio got down to 3, then rebounded towards 1978, and then it was a massive crash of that ratio. This time it's taking a little longer, but I think it's going to take the same route. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and Twitter. I'll talk to you later. Take care. Bye.